Good morning, everybody. Welcome to your Watanabe show. My name is Princakasta, and today we have Kora along with us. So, without further ado, first we are going to play states, and then we will be moving towards the news part. Yeah, Kora.
There's nothing to place the trade. We had to wait till it either breaks even or wait till tomorrow. So maybe try your luck with 228 for a gap fill.
So, should I place it at 228? No.
Yeah, limit at 228.
Okay. So, we have placed the limit at 228.
Now, what I'm looking at is just go to my Twitter.
Okay.
Yeah, this is I'm not good in trading around holiday breaks. That red chat, that red one.
This one, the dot one.
No, the table, green and red, below that. This is what I'm looking at after a down day on Powell's testimony. Since he became chairman, there is a 75%, 12 out of 16 wins, with an average of 2% gain over 3 days. That means it's Friday, and so if US rallies, we also might rally. But the thing is, if it turns out into a loss, it turns out into a big loss. Average win of 1.5% versus average loss of almost 2%. This is what I'm looking at. Some dip buying might emerge today or tomorrow. Right, yeah, I can go to the news. Yeah, the thing is, I could have placed the trade by now rather than on Monday evening.
Yeah.
All right, so that's a month-end trade, so nothing to fret about it. We'll see.
So, in the global market updates, we have US futures is marginally higher following sell-off in the cash market. US market ends with deep cuts on Tuesday. Frontline indices fall up to 1.7%. Sell-off in the cash market was followed by hawkish comments by Powell, and moving towards SGX Nifty that trades lower, that indicates a gap down start for the Indian market. We can see that all the Indian ADRs are down. And in stocks to watch, we have a positive news here for all cargo logistics. So the company will acquire approx 39% stake from partners in the contract logistics business. GAIL, the company will have a meeting on 13th of March to approve the interim dividend. And Ajanta Pharma, the board will consider a proposal for buyback. Yep, nothing much in the news for the day. NTPC, so the company saw 11.92% growth in electricity generation, and that's a positive news for NTPC here. PVR, the company opened 11-screen multiplex in Phoenix Market City, Chennai. In block deals, these are two stocks that we can watch on screen. And Trading Tweaks, Marico is going ex-date interim dividend today. And in insider trades, we have is Zydus Wellness, Bajaj Finserv, and Supriya Life Science and News. Pledge share.
The Bajaj Finserv is, I think, intra company transfer. Some guy sold and some guy bought. So they were transferring from one family to other family.
Okay. In FNOQs, we can see that FIs have bought in the cash market and DIs also. The FIs have bought around 721 crores and DIs have bought around 757 crores. FI and derivatives have gone long in index futures and short in index option, and overall there is a notional addition of around 642 crores. In money market update, we can see that the rupee closed at 0.07% higher against the US dollar at 81.92 on Monday. That's it in the news. Kura, would you like to highlight something on?
Yeah, the Fed watch tool. Mm.
Okay, the Fed watch tool. Yes. First, we'll go on.
So 70% of the crowd has now moved above 550 band. So the current rate is 450, and people see above 550, and no rate cut. The rate cut means it has to be at 400 to 425 or 425 to 450. That's a 0% probability now. 37% and 24% sees above 550. That means another 100 bips hike from here. Whether 425s or 250s or how, we have to see the dot plot. And 1 month ago, there was hardly anybody betting on 550. That's just 0.7%. And another thing is the 2 and 10 year yield, 10 versus 2. Yes. The next graph. Yeah. Now, this is inverted already about a year back. When did it invert? The date?
Yeah. So somewhere.
Yeah. June. So about 9 months. Now it is steepened a bit, gone below 1% or touching. Yeah, it's actually gone below 1%, minus 1.03. The highest since 80s. I don't know what happened the direction in 80s like that. Maybe some methodology change also there. Or I have to read actually before 85. Now it also gives you a that whatever is impression that whenever it goes below 1, there is a shadow, that is a recession. Right, so all the 1 belows or at least immediately followed a shaded zone. That shaded zone is recession. So now the recession is due. Now is it a shallow or a deeper one? So that 2008 is a deeper one. So the length is very long versus 2002, which is very short. And the one in early 90s is also very short. The one in early 80s is a little deep. So it's anybody's guess whether we get a deeper one or a shallow one. And how long it's going to last. If it lasts like 2008, we have a trouble. Even 2002 is troublesome. Even the recession length is period is small, but there was a deep cut in Nasdaq, almost 50% down. The 90s, I don't remember how it was equities effect.
So you mean to say?
I mean to say recession is on the cards. When, I don't know. And how deep the recession will last or how long it will last. And the only thing is certain is if interest rates are going up, your unemployment needs to go up. So it can't be at 3 point, whatever is unemployment rate. Just put U rate, unrate in that series. No, on the top. Unrate. So it's 3.4. It can't stay at 3.4. So there was a prediction it will go to 4.6 or 4 point much above than where it is today by the year end. Which means 1 percentage point extra unemployment. That translates to 2 million job cuts from now on. Yeah, it's a bit pessimistic times are ahead. But the thing is, I'm positive on equities. The economy front, we are heading into bad times, but stock market terms going much higher than where we are today. So now where's the market, Prince?
Yeah. 17,006.
No recovery, it is there on the 17.7 call is at 175. Now it is 170. Banks are leading a slightly nifty. Maybe a gap fill, or if there's no gap fill, tomorrow a rally. So I'm going to hold this. Watch out here. Let's see what happens. Is the US market rallying, or just go to Yahoo Finance?
Yahoo Finance. Yeah.
The US futures are flat, just 2 points down. Yeah, maybe a rally into Germany or into US Open today. We'll see what it's going to tell today again. So today there is another follow-up of the testimony.
Ikora, I have a
Yeah.
question. Can I ask?
Yeah.
You said that the economy is looking bleak, but the stock market might still go up, right?
Yeah.
Is what would be the general reason for it? Is it because of huge money supply? The stocks are
No. Prince, go to that manual of momentum.
Yeah.
This is a free article because it's a free. I can't put it behind firewall. So click
This
that.
one.
Come down, click that. Download the full report. What happened? You haven't downloaded that.
Yeah. No. I'm just sharing it. It's downloaded.
No, click that link.
This.
Yeah.
Yeah, it's getting downloaded. I'll just. You won't be able to see. It's in a PDF format. I'll just share.
It is visible.
Go to figure 50.
Yeah. Can you see?
Yeah, come down. Figure 50. It must be on 20th page or something like that.
Figure 50.
Yeah. Search that. I want to see that figure 50. Yeah, so now this is the real asset returns versus real interest rates. The real interest rates are either in the top 5% or next 15%. Obviously, they are higher in the percentile terms.
Okay.
So now we have to look at the last two. So when we enter into the last two, that's what the current condition of US markets. The equities in the next 5 years generally give the highest returns of 9.1% and 10.2%. And the interest rates are low, that's at the bottom. Next 15, your forward interest rates are low. Your equity returns are low at 1.7% versus 4.9%. I don't know why the data is very tilted towards minus 0.56 when the interest rates are at a low band. That was the condition in the last 5 years. Interest rates were at 0 or even negative in some European countries. And the good thing is bonds also return high. 9 and 6, 10 and 9. So your 60-40 blend should perform well. Actually, did he talk about 60-40 blend? We'll come to the next data.
This one?
No, I have to search 60-40 blend or 60-40.
Yeah. Is this?
Yeah, that's the one. So 60-40 blend generally gives you, since 70s, it is giving 5.1. But the interest rates were very high, like 15% in US those days. So we should actually look at the last slide. So equities are 4% and bonds are 1.5%. So the 60-40 blend should give you 3% returns in US. Last year it didn't perform well, so this year it should perform well.
So according to this graph and then the earlier graph.
Yeah, so basically what you call this as a risk premium. Search Ashwath Damodaran equation, risk premium. Go to the net, not here, net.
Okay.
You guys should read this book. They basically give you every year around February, all the way to 2005 or 2008.
Damodara.
Equity risk premium, the fourth one. Not India, US. I don't think he has a model for India. Nobody has a model for India. Homepage, companies, yeah, homepage. Second one, not that one. Implied equity risk premium update. When did he update? March 1st, 4.78. That's a yield. Actually dropped from 4.89 to 4.78. So he's putting somewhere at 4.78 or 5.58 depending on cash yield. That's what your equity returns are going to be based on the trailing price to earnings or cash flow. So he gets it reasonably good. It's not like he's the exact, his numbers are exact, but if you look at a boundary, he gets it correct. And that's basically that 4.78 you have to add to the bond yield, 10-year bond yield. So if 10-year bond yield is 3.9 or 3.6, 3.6 plus 4.8. How much is that?
3.6 plus 4.6.
8.4. That's what is returns expectation for this year. S&P started at 3,900. So 8% upside. So somewhere around 4,200 is what is looking at a year-end target. And it's a moving data. It keeps changing. So you can't rely on it. I mean, you can't rely on the sense it's a moving target. So he changed the figure from 4.89 to 4.78 because the new data is coming. Some earnings were missed or something like that. So And cash yield actually increased 5.54 to 5.58. Yeah, but more or less, he's putting the risk premium at 5% with 10-year yield at 3.6. So you should expect 8.6% returns. And that's somewhere around 4,350 or 4,400 S&P target. All right. Anything else or?
No, nothing. It's International Women's Day, so we wish on behalf of entire Watanabe team, wishing all the women out there.
Market recovering. Market recovery.
Yeah, but we don't have a trade. I was playing for a gap fill. I mean, the trade was buying at 175, but we didn't have money. So that's what I was telling. Instead of buying on, you could have bought on today, gap down opening. And maybe it gets filled. So let's see. And we'll come out with more loss. All right, Princey. So see you in the evening. Let's see where we close.
Yeah. Thank you so much, everyone. Don't forget to like, share, and subscribe, and have a good day.